Have you just heard the shocking update about Australia's pension system in April 2026? Millions of Centrelink recipients are now asking the same question. Will my payments increase, or are new cuts and changes coming that could affect my financial stability? Because what has just been revealed is not a small adjustment. It is one of the most significant pension updates in recent years, and it could directly impact age pension recipients, disability support pensioners, and even carers across Australia. Stay with me, because everything you think you know about your pension payments might change after this update. Welcome back to the channel Aus Pension Update. If you are relying on Centrelink payments, age pension, or any government support in Australia, then this video is extremely important for you. Today we are breaking down the April 2026 Australia pension shock, the newly adjusted payment rates, and the major Centrelink updates that are now being discussed across the country. Make sure you watch until the end, because I will also explain what steps you should take right now to protect your payments and avoid missing out on any potential increases or benefits. Now let's get straight into what is happening in April 2026. The Australian government has introduced a new round of pension adjustments that are linked to inflation, cost of living pressures, and updated wage growth data. Over the past year, Australia has been facing rising living costs, especially in housing, groceries, electricity, and healthcare. Because of this, Centrelink payments have been under review to ensure that pensioners do not fall behind financially. However, the shocking part is not just the increase itself, but the structure of how these changes are being applied. From April 2026, pension rates are being recalculated using a revised indexation formula. This means that age pension payments are no longer simply adjusted based on inflation alone. Instead, the government is now using a combined model that takes into account wage growth, inflation trends, and cost of living pressure indexes. For many pensioners, this sounds positive, but in reality, it creates mixed outcomes. Some recipients will see slightly higher payments, while others may notice only minimal increases that do not fully match real-world expenses. For single-age pension recipients, the base payment has been adjusted upward compared to the previous cycle. However, the increase is not as large as many expected. Rising rent and medical costs are still outpacing pension growth in several regions of Australia. Couples receiving combined pensions will also see an adjustment, but again, the real impact depends heavily on individual circumstances, such as rental assistance eligibility, savings, and additional Centrelink supplements. One of the most important updates in April 2026 is the change in Centrelink asset thresholds. The government has slightly increased the allowable asset limits for pension eligibility. This means some people who were previously close to losing their pension due to savings or property value may now remain eligible. However, this also comes with stricter reporting requirements. Centrelink is increasing data matching with banks and tax records to ensure that all financial information is up to date and accurate. Any mismatch could result in delays or temporary suspension of payments until verification is completed. Another major change involves rental assistance. With housing costs continuing to rise across Australia, rent assistance has been adjusted in line with inflation. But advocacy groups are arguing that the increase is still not enough. Many pensioners in major cities are still struggling to cover rent even after receiving the updated supplement. This has created ongoing debate about whether the pension system is truly keeping up with real living conditions. Now let's talk about disability support pension and carer payments. These groups are also affected by the April 2026 Centrelink update. Disability support pensioners will see similar indexation adjustments, but eligibility reviews are becoming more frequent. This means individuals on DSP may be required to provide updated medical documentation more often than before. Carer payment recipients are also seeing tighter monitoring of care requirements and income thresholds. There is also an important digital shift happening within Centrelink services. From 2026 onward, more services are being moved to fully digital processing systems. This includes claim submissions, income reporting, and verification processes. While this is designed to make the system faster and more efficient, many pensioners who are not comfortable with digital systems may face challenges. The government has promised additional support services, but it is still important for recipients to stay updated and ensure they can access their online accounts properly. One of the biggest concerns among pensioners right now is whether these changes could lead to hidden reductions in real income. Even though official rates are increasing, the cost of living in Australia continues to rise faster than pension adjustments. This creates what experts call a real value gap, where the money you receive increases on paper but buys less in reality. This is especially noticeable in food prices, healthcare expenses, and energy bills. Another important factor to consider is taxation and income reporting changes. While pensions themselves are generally tax-free, any additional income or savings interest is now being monitored more closely. Centrelink is strengthening compliance systems to ensure that income declarations are accurate. This means pensioners must be extra careful when reporting any side income, investments, or financial changes. So what does all of this mean for you personally if you are receiving or planning to receive the age pension in Australia? The most important thing is awareness. You need to regularly check your Centrelink account, update your personal details, and make sure your income and asset information is accurate. Even small errors can lead to payment delays or reassessments that temporarily affect your income. Another key takeaway from this April 2026 update is that pension planning is becoming more important than ever. Many financial advisors are now recommending that pensioners review their budgets, reduce unnecessary expenses, and explore additional support options such as state-based concessions, healthcare cards, and energy rebates. These additional supports can make a significant difference in managing the rising cost of living. There is also growing discussion about future pension reforms beyond 2026. Some policymakers are suggesting a complete restructuring of the age pension system within the next few years, potentially moving toward a more flexible support model based on individual cost of living zones. While nothing has been confirmed yet, it is clear that the pension system in Australia is continuing to evolve. Despite all the uncertainty, one thing remains clear. The government is under increasing pressure to ensure pensioners are not left behind in an economy where living costs are rising rapidly. That is why these April 2026 changes are so important. They represent both an adjustment and a warning that future reforms may be even more significant. If you are currently receiving Centrelink payments, now is the time to stay informed and proactive. Do not rely on assumptions. Always verify your payment details, check for official updates, and make sure you understand how these changes affect your situation. Even small updates in thresholds or rates can make a real difference in your monthly budget. Before we finish, let's quickly summarize what this April 2026 Australia pension shock really means. Payments are increasing, but not enough to fully match the rising cost of living. Asset and income rules are being more closely monitored. Digital systems are becoming more important for managing your Centrelink account. And overall, the pension system is slowly shifting towards stricter compliance and more structured adjustments. Thank you for watching this update from Aus Pension Update. If you found this information helpful, make sure to stay connected with us because we will continue bringing you the latest news, updates, and explanations about Centrelink payments, pension changes, and government support programs in Australia. Don't forget to like, share, and subscribe to Aus Pension Update so you never miss an important update that could affect your payments. Take care, stay informed, and we will see you in the next video.